All right, everyone, welcome to Trash or Stash, where we take a popular stock, strip away the hype, and judge if it's worthy to be stashed in your portfolio for massive future gains or tossed into the red hot pile of garbage.
Yeah, well, that's disgusting.
This week on trial for the murder of Mr. Big is floundering fitness stock Peloton. Is it a trash or is it a stash? Let's find out. Here we go. What's up, my future millionaires? At the risk of making you nauseous, look at Peloton's stock right now. Pull this thing up. Oh, God. Less than 2 years ago, this stock was trading for over $170 a share. But now it's sitting in a bargain bin, priced for clearance. If you told me back in 2020 that I'd be able to buy this stock for anywhere below $20, I would have called you a liar and told you to take your quarantini and get the hell off my porch. The early days of the pandemic were an absolute godsend for Peloton. Everyone was locked up indoors, just losing their minds.
Oh, God, I'm sorry. Am I still here?
And then here they were with at-home fitness exercise machines designed to make it feel like you're in a real exercise class surrounded by human beings. For many people, being berated by the fitness instructor that lived in your exercise bike was the closest thing to going on a date. As a result, Peloton's sales and profits and popularity soared to unprecedented levels. And just when it seemed like the company was destined to become this untouchable behemoth, Peloton Wife was born. You remember this? Peloton Wife? That was the holiday ad campaign where a husband bought his terrified-looking wife a Peloton for Christmas. And it was not well received. I mean, flat out, it was a PR disaster. But that's really all it should have been. A bad ad, mostly forgotten except for some old BuzzFeed articles, right? Instead, Peloton Wife became the harbinger for one of the worst years of press I've seen a company go through in any single year. I mean, buckle up. I'm going to blast through the biggest stories for you real quick, all right?
Okay, story time, guys. Story time, story time, story time. Okay, so.
A few months after Peloton Wife, the Consumer Product Safety Commission warned users to stop using the Peloton treadmills when a kid was pulled under the machine and killed. Peloton initially disputed the claim, saying that they told Peloton users not to let small kids or small animals play in the machine's kill zone. But in the end, they relented and recalled 125,000 treadmills, all because they were missing a basic safety feature that every $200 treadmill has. In the wake of that recall, the SEC and the Department of Justice launched investigations into the company, keeping Peloton in the news as the villain of the week for months and months and months. During that same period, the company revealed it had suffered a massive data breach. So the data for over 3 million Peloton users was exposed, including the deets of a young fitness enthusiast by the name of Joseph R. Biden. So now you've got the Department of Homeland Security who's getting involved. And just when it seemed like it couldn't get any worse, Peloton committed the worst crime of all in the eyes of the American public. It killed a fictional character in a lackluster reboot of a beloved HBO franchise. As bad as all that press was continuing to pile up on Peloton's doorstep, demand for their fitness equipment dried up faster than a pair of unmoisturized lips at a kissing festival. Sales plummeted, losses mounted, and the stock plunged to the lowest price since its 2019 IPO. In its most recent quarterly report, the company said that it lost $757 million for the 3 months ending in March. Revenue slid 15% to $964 million, and it's forecasted to fall even lower to about $675 million for this current quarter. I mean, it seems like an open and shut case, right? Maybe the Trash or Stash team could just go home and take the day off early. Well, just, go ahead. What the hell? Don't you dare stop recording, Luis. I'm not even finished yet. Here's where things get really juicy, okay? In February, Peloton announced that its CEO would step down for, obvious reasons. John Foley was replaced by Barry McCarthy, a seasoned executive fresh off a stint as CFO of Spotify and Netflix before that. And this guy was barely in the door, and he gutted 20% of the corporate bloat and completely restructured the company. I mean, it's not good for the bean counters who lost their jobs, but a virtual first step for a company hemorrhaging money from growing too fast during the lockdown.
I've been studying the market going back 40 quarters.
McCarthy's got a wealth of experience mucking around in the finances of subscription-based services, and we're already seeing that at play in the company's new pricing model. Starting in June, Peloton plans to lower the price of its machines and in turn, jack up the price of its subscription services. Now, yeah, on the surface, this looks to be robbing Peter to pay Paul, but the message coming down from the top is loud and clear. Get a Peloton into as many homes as you can, and the subscriptions will look after themselves. I mean, this model is already proven on Wall Street. I mean, it works for Gillette. You know, they basically give away the shavers, and then they charge you a ton for the razor cartridge refills. I mean, the model works for Hewlett-Packard. They basically give away their printers, and then they charge a ton for the toner refills. So now with Peloton, this concept is the driving force behind several new initiatives sparked by McCarthy. Going forward, Pelotons will be sold through third-party retailers, sacrificing the sexiness of the exclusive showroom to reach a much larger audience. And in the coming months, the company will launch a pilot program that allows anyone to rent a Peloton and try out their classes.
What if there's obstacles? What will you do?
So apparently, McCarthy believes that the hardware is good enough to speak for itself. The only problem is access. So how does this hardware stack up? Well, I've got a Peloton and I love it. I mean, every single day I've got a new class from Alex Troussan or Cody or Kendall Fitness or Jess King. I mean, the instructors are great. It's very sticky. It's very addictive. It's a great way for me to get my 30 minutes of cardio in without leaving the house. It's awesome. It's not going anywhere. Now, on top of all that, Peloton is now going to pay Beyonce to make exclusive music for their exercise class.
Beyonce?
Yeah, that's right. The queen herself. There's going to have exclusive Beyonce songs that you haven't heard just because you don't have a Peloton. Clearly, I mean, I love my Peloton machine, but that's not enough to make the stock a winner. So here we have it. The big question, is Peloton right now a trash or is it a stash?
You know what? I'm not leaving. I'm not leaving!
Okay, at these price levels, Peloton is a stash. It's an absolute stash. You have all the bad news, it's all priced in, and the recovery has already begun. Peloton has had more than its fair share of bad press, but with this new CEO and with their business strategy, I predict a dramatic reversal of the company's fortunes. There's also the looming takeover rumor. I mean, for instance, if I'm Apple, okay, and I'm sitting on $51 billion in cash, I would go out and acquire Peloton tomorrow. Just like that, in one shot, you will now be the leader in at-home fitness technology. I mean, think about it, right? Adding Peloton smart equipment will be a shot in the arm for iPhone makers and Apple Watch and their Fitness Plus subscription services. It totally makes sense, especially at these levels. So if Apple decides to buy Peloton, or if they even think about buying Peloton, I think it's far more likely right now than it's ever been before in history because the prices are so low. And if this happens, if Apple acquires Peloton or Peloton gets acquired by anyone else, it's going to be a legendary payday for investors who move into Peloton today. I mean, some investors are bummed out that things didn't magically turn around for Peloton after a month of new leadership. But I mean, really, are you kidding me? Structural changes to a company the size of Peloton's take time. Rome, it wasn't built in a day. I mean, these abs, I mean, they weren't sculpted in a single afternoon. We know how high this stock can go. It was $170 a share not long ago. And right now, you can buy it at a deep, deep discount. So that's what we're going to do. We're going to buy the stock now. We're going to stash it away. And this thing has all the makings to be a big, big winner. And there you have it. That's your Trade of the Day trash or stash episode for today. If you like this episode and you like the idea behind Peloton, put a comment in the section below. Tell me what stock you want me to feature in a future trash or stash episode. And if you want another stock to stash away in your portfolio, my partner Karim is recommending a stock. It's less than $2 a share. It's one of the most well-respected, recognizable names in all of the world. It is the stock to stash away right now. Click that link below, check out Karim's presentation, and you will get probably one of the best value stocks in the entire market. Until then, have a great week, everyone, and cue my exit music.